Hi everyone, welcome back to the Accounting and Tax Help Desk, a podcast provided by Alamir CPAs and Associates. My name is Haas, hosting you this episode. This episode, we are talking about the post-tax filing financial checkup for business owners, leading to your filing your tax, leading to your filing return. Uh, you work with your tax accountant, you work with and you gather all the document needed for a tax return. So it's fresh in your mind. The data is fresh. You can use this data while fresh in front of your mind to have a health check of your financial situation. Uh, Before you don't want to wait and you forget about all the detail you just gathered. So use this time, protect yourself, and check up the health of your business. When you file your tax return, you're gonna compare your profit and loss and balance sheet on your tax return to your internal documents. You're gonna get the so you're gonna get the cash flow statement and compare it to your internally. But the most important thing that you need to measure is debt to income ratio. I'm gonna spend some time on this topic. It's very important. Any business owner who wants to make a huge financial move within the next 12 to 24 months that needs the third party assistant for financing, you need to make sure your debt to income ratio is very healthy. The lenders, 90.9% of the time, they're going to ask for the past 2 years tax return. And if you don't have that accurate or healthy debt to income ratio, you're gonna be in trouble because they are gonna deny the loan to you. Uh, Plan ahead, making sure during the year you calculate that number, and also that number in your tax return is a healthy number. If you wanna spend all your time and energy on saving money on taxes, that means you're bringing the debt to income ratio lower, and that might gonna have a negative impact on you down the road. The key financial KPI I would like to review after tax return is net profit margin, tax liability, cash flow trend, and expenses ratio. I want to know if my clients are thriving, surviving, or barely alive. So tax return give me that data in one package, so I can just review and understand what's going on. As I just mentioned, uh, tax return gives you the debt to income ratio. Also, it's going to give you the working capital. It's basically means how much breathing room you have on your business. Are you able to hire people? Are you able to pay your bills? Are you able to uh, invest money on your business and grow the business? So tax return has this working capital schedule that you can review, calculate, and analyze it. Uh, and again, as I mentioned, bankers, they use this number. So make sure you check that number right after you get your tax return. The other thing that you guys need to, or any small business owner needs to review, is check your interest income or interest expense on your tax return. If you are making too much interest payment, it's gonna show up on your interest line item, and then you can make a decision. Do I need to refinance because am I paying too much interest? What's the interest rate right now in the market? If I think the interest payment is gonna be higher because the government gonna change the interest rate, let's plan ahead for that. If they're gonna reduce the interest rate, let's refinance it. So the credit position of your tax return and interest payment, it's very important to analyze it while it's fresh on your mind. When you get your tax return from your tax accountant, sit with your CFO and analyze it and make sure you see if you're making money or you're losing money. If you're making money, uh, it's the best time to use that money to invest. If you're losing money, it's the best time to compare it to the historical data, and maybe you need to adjust some prices, and also you might need to cut expenses, but you need to plan for it. So uh, be make sure to sit with your CFO and review the data. Another important line item on your tax return is the salary and wages. Uh, so you can compare the salary and wages to your net revenue and come up with the percentage. Uh, Usually depends on the industry, should be around 20%. And with that 20%, you can make it decide, are you spending enough on your wages and salary, and do you have enough money to hire? So that ratio gives you that data. With that, you can go and hire some employee to invest, or you might your salary and wages costs compared to revenue, it might be too high. It might be 60% of your salary. For some industries, that totally perfect and makes sense, but for some industries, it does not. So depends on your nature of your business. If that ratio is too high, I hate to say it, but you might need to adjust that salary and wages costs, and maybe you need to let go of some people. Uh, Again, I don't like when I say this, but that's a reality of the business. But that's why you need to work with the CFO you trust during the year to plan for all this activity. You don't want to get the tax return and be shocked. You want to plan for it and not react to it. Business owner should look at the KPIs during a year, every month, compare it to your budget and forecast. But when you get your tax return, it's the scorecard of your business. It's a season finale. So with the true numbers that reconcile to all the internal documents, you can adjust your KPI. You can basically understand where you're losing money and adjust the metrics based on that, or where you're making money and adjust the KPI based on that. You don't want to be a guy who reacts to your tax return. You want to be a guy who just get the tax return, say, "Oh, I knew that, I'm signing, bye." In order to get to that level, you need to track your expenses on a monthly basis, track your revenue on a monthly basis, reconcile your financial statement, balance sheet on a monthly basis, uh, talk to your fractional CFO on a monthly basis, plan ahead, make sure you have a tax planning, make sure your CFO is in constant communication with your tax accountant for all the tax planning. And also, one of the mistakes I've seen business owner makes when they creating the budget, they are not putting their tax payments in the budget. So they budget for all the expenses except for the tax payments. And usually they even forget, or they say, "Oh, when I get to the tax return, I'll talk to my tax accountant and have them to reduce my tax return." That's wishful thinking. You need to plan for it, and if you follow all these steps on a monthly basis, you get to that position. These activities are not going to be time consuming. Your CFO, your accountant, they have system to automate all the system, reconcile transaction, reconcile revenue. With the use of AI, they are automating all the transactions. So make sure you work with the fractional CFO that you trust to get to that data, and you don't need to spend that much time on this. On a monthly basis, you need to make sure you compare your financial data to your budget. That's a first step. On a quarterly basis, you need to have some type of macro vision to have a quick checkup. When you get your tax return, it's the annual checkup on your business, so it's very important. But I'm not saying you only need to check up on your financial data on a tax return, on the taxes end, but you have to do it during the year 12 times a day, meaning 12 times a year minimum. But Just like you go to doctor to have a blood work done, tax return is the same concept. It gives you the overall view of the business health. 99% of the time, if someone is reacting to the tax return instead of planning ahead, they are losing time, they are losing money. Business owner, they are overlooked of the simple fact that the first 7-10 days after the tax season, it's the perfect time to plan ahead for next year. People, most of the time, they just a tax return, either they are sad, they're happy, they sign it, they pay the tax return, pay tax payment, and they just file it and they forget about the entire scenario they went through. uh, you need to be a smart, you need to use the data, plan ahead, budget for it, do not react to it, and make sure you have a better strategy next year. Thank you again for listening to us. As always, make sure you drop a comment, a like, subscribe. If you have any question, reach out to us at helpdesk@alamircps.com. We are here to help you. Catch you next week.